Good day, YouTube. This is Jay Money with Falling Forward Financial. Just come across this article yesterday. U.S. stocks drop for the third day as Treasury yields spike and recession fears grow after Fed rate hike. So, lots of fear, a lot of stuff going on. Everybody's wondering what's going on. Come across this and thought I would do an article on it. So, U.S. stocks fell Thursday for the third straight session, with the S&P 500 hitting the lowest level since July. Wow, that's got to say something. So, getting ready for the Christmas season. I don't know. So, bond yields continue to mount higher as the market prepares to see more Fed rate hikes, and the Fed policy-sensitive 2-year Treasury yield rose to 4.1 for a fresh 15-year high. So, not too good a thing. So, major indexes fell for a third straight session as the S&P hit the lowest point since mid-July. It touched 3,749.35 intraday. Stocks plunged Wednesday after the Fed raised interest rates by 75 basis points at a third consecutive meeting, pushing the Fed funds target rate to between 3 and 3.25%. Stocks came under pressure again on Thursday as Treasury yields rose, highlighting investor concerns about a Fed-induced recession as the central bank battles high inflation. Fed policy-sensitive Treasury yield rose 4.1% for the fresh 15-year high, and the 10-year Treasury leaped 19 basis points to 3.7. Here's where indexes stood at 4 p.m. S&P 500 at 3,757.99, down 0.84%. Dow Jones 30,076.68, down 0.35 or 107.10 points. And the NASDAQ at 11,066.81, down 1.37%. It is possible that the unemployment rate could gently glide higher and wages cool without an outright recession, but it's never happened before. Historically, increases in the unemployment rate of a size that the Fed wants to see have coincided with a recession, meaning notable declines in employment. Income output and sales spread widely across the economy and probably lasting for more than a few months. So, probably go through the Christmas season. Who knows? Could go through, elections are around the corner, so quite a few different things. So, weekly jobless claims released Thursday rose slightly by 5,000 to 213,000. But the labor market remains strong. Here's what else is happening today. Lumber prices slumped with mortgage rates rising above 6% on the Fed's rate hike this year. The Bank of Japan intervened in the currency market to defend its slumping yen against the U.S. dollar. Bond King said the Fed commitment to big rate hikes means a 75% chance of a U.S. recession in 2023. China has been trimming its holdings of U.S. government debt and moved some bonds to offshore tax havens for protection from the future sanctions. Economists said the Fed avoided higher, faster, longer fasting rates and elevated recession risk if it had acted sooner. So, here's some bonds and crypto. Gold rose 0.3% to $1,680.70 per ounce. Bitcoin rose, although it's down since the last time I looked at it, but just a bunch of good info in there, so I thought I'd do a quick video on that. If you have any comments, go ahead and list that in the comments as well. And I'm going to be working on some more videos here throughout the day, so I thank you for watching. If you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing, and hit the bell so you're notified of when the next videos drop. Again, this is J Money, following Forward Financial. Happy trading, happy investing, stay green. Cheers.